This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. We're going to go through question 2 of the paper F5 December 2010 exam. So make sure you've got the question in front of you. And as always, look first of all at the requirements. And the requirement here, it says assess the performance of the business in 2010 using both financial performance indicators calculated from the above information and non-financial performance indicators. Now, at first glance, that looks as though it's going to be a pretty tough question, but in fact, the examiner has helped you enormously in the note, because the note says clearly state any assumptions, show or workings. Your answer should be structured around the following main headings: turnover, cost of sales, gross profit, indirect expenses, net operating profit. And in discussing those areas, refer to non-financial performance indicators where relevant. So she really has helped you. Your answer should be structured around the following main headings, and there are 5 items there. The questions hold 20 marks, so on average 4 marks for each of those items. So she's not expecting an awful lot for each, and structure it around, even though we've not read the question yet. The first one I'm going to comment on is turnover. We'll see in a moment if we can make a few comments, and then look at cost of sales and so on. Now let's look at the body of the question. It should hit you immediately. Obviously, there's an income statement there in the middle, the management accounts for 2009-2010. So that's where we'll get the financial information from. And at the bottom of the first page, there's some non-financial indicators. Percent of students transferring from another provider. That's a good sign, obviously, if more people transfer. Number of late enrolments. Late enrolments due to error, that's something that's bad. But look, the number's fallen substantially. Percentage of students passing exams. I'm starting to guess already what the sort of business is, but the more students pass, the better. Labour turnover. How many staff are leaving and needing replacing? Well, for any business, we want that to fall. Number of complaints. Again, whatever the business, the fewer complaints, the better, and that's fallen. Average number of employees. I'm not sure yet what the significance is, but between the 2 years, that's hardly changed. What about the written information at the top? The accountancy teaching company, a company specialising in provision of accountancy tuition. I'd already guessed that from the information about students below. Our accounts are 30th of November each year. In year ended 2009, we held a 60% market share. But over the last 12 months, the tuition market in general has faced a 20% decline. So, numbers of students overall has gone down 20%. Well, that's going to be relevant when we look to see how we've performed. In 2009 and before, there'd been an ongoing problem with retaining staff, which had a knock-on effect on the quality of service. Following the completion of developments, in 2010, we were able to offer a far improved service to students. The developments included a 24-hour student helpline, an interactive website, a training program for staff, an electronic student enrollment system, and an electronic marking system for the marking of students' tests. Then come these profit statements, and underneath, management had asked all freelance lecturers to reduce their fees. I'm reading very quickly. The whole of that paragraph is about staff costs. So I won't waste time reading it in detail at the moment, because the first thing we're going to look at is turnover. And of course, the first comment's got to be, looking at our profit statements, what's happened to the turnover? The turnover has fallen. And what's it fallen by? Well, let's do it in percentage terms. It's fallen from 72,025 to 66,028. We're going to express the fall as a percent of what it was in 2009. So what is it? 72,025 minus 66,028. It's fallen by 5,997 as a percent of 72,025. It's fallen by 8.3%. Now, of course, any fall in turnover is bad in a sense. But here, remember, we read in the first paragraph, where are we? It's the fourth line, fourth line. The accountancy tuition market in general has faced a 20% decline. And yet we've only fallen by 8%. And so, in fact, relative to the market, we're doing very well. It's much less than the decline in the market. Of 20%. It must mean we must have improved the market share. I'm not going to work out numbers there. I suppose we could, but we did have 60% of the market previously in 2009. Well, think about it. If the market's gone down much more than our sales have gone down, our market share must have improved. I mean, those are all facts. But what about non-financial information? Why has our market share improved? Well, it would appear that it's probably because of this far improved service to students. The last line of the first paragraph, following the completion of developments which have been ongoing for some time, we were able to offer a far improved service. So mention it. It's probably because we're offering a far improved service. And so things don't look too bad there. I mean, it's clearly bad that there's the market in general's fallen by 20%, but there's not much we can do about that. But we have done well in that we've gained market share, almost certainly due to people being aware we're offering an improved service. Anyway, that's more than enough there. Let's turn to the next heading, cost of sales. Well, cost of sales have fallen. So they've reduced by, again, what percentage? It's gone down from 52,078. It's gone down from there to 42,056. Again, we'll do it in percentage terms. And so, how much have we reduced it by? 52,078 minus 42,056. It's gone down by 10,000 on 52,078. A 19.2% fall. I think, well, I hope my arithmetic's right, but even so, 19.2%. Our turnover went down by 8.3%. And of course, we want to be able to reduce our cost of sales by at least as much as the fall in sales, but here it's substantially more. Substantially more. Than the fall in turnover. which is good. We've actually done well there to reduce it by so much. How have we reduced it? Well, I've already seen one thing that's cost of sales. At the end of the first paragraph, when it talked about our developments, the last one was this electronic marking system. The costs were expected to be 4 million less in 2010 than marking on paper. Marking expenditure is always included in cost of sales. So that's part of our reduction. In 2009, it would appear we marked on paper. 2010, well, we're going to save 4 million. So, approximately 4 million saved by electronic marking. That's good. But the total saving, of course, was 10 million. Where's the rest come from? Well, now I think we need to read properly that paragraph below the profit statements. We asked all freelance lecturers to reduce their fees by 10%. Freelance lecturers are not employees, but are used to teach students when there are not enough of our own lecturers. All employees were also told that they'd not receive a pay rise for at least a year. The total staff costs were 41.663 million in 2009 and were included in cost of sales, as is always the case. So, staff costs are obviously a big bit of cost of sales. Let's look at staff costs. Fourth line, total staff costs were 41.663 million. Next sentence, freelance lecturer costs are 35% of the total. So, 2009, there's freelance, and there's our own employees. The total of these were, how much was it say? 41,633, and 35% of them were freelance. So 35% of that, 14,572. The remaining 65% must be our own employees. I better just check my arithmetic for a minute. 35% of 41,633, 14,500, that's right. And so, what's left? 27,061 for our own employees. What about 2010? Well, it says freelance were asked to reduce their fees by at least 10%. However, our own employees were told they wouldn't have a pay rise. Well, our own employees, the number has hardly changed. We saw that in the bottom table. The average number was 1,080, it's now 1,081, so the change is insignificant. And since they didn't have a pay rise, presumably they were paid approximately the same, 27,061. What about the total of 2010? Well, 1, 2, 3, 4, 5. On the sixth line of the paragraph below the profit statements, in 2010, freelance lecture costs were 12,394. So total staff costs seem to me to be about 12,394 plus 27,061, 39,455. Well, of course, employees, simply no pay rise, but freelance has fallen by 14,572 minus 12,394. They've fallen by 2,178. And if I do it in percentage terms, it was 14,572. 14,572. A fall of, it's 14.9, 15%. And so we've done extremely well there. Freelance costs down by 15%. And it does say that somewhere that it was smaller class sizes. And the last sentence of the paragraph before the profit statement, the same type and number of courses were run in both years. So we have the same number of courses, presumably therefore the same number of teachers. And so we've managed to get the freelance people to reduce their prices by 15%, which is clearly extremely good. What about the rest of cost of sales? Well, other cost of sales. We know what the total was each year. It was 52,078, 42,056. So the remainder, the bulk of it is staff costs, but the remainder, 52,078 minus 41,633, 10,445, and 2010. 2601. So there's a substantial reduction there. Other cost of sales costs. We've saved. What's the difference? $7,854. We know some of it. I think I wrote at the beginning, I certainly said, yes, 4 million by electronic marking. So 4 million from marking. The balance, therefore, 3.854 million from other savings. And so we have done extremely well there, and make the comment that cost of sales we have achieved substantial savings. Okay, next heading. The next one, the gross profit. Well, here's surely very brief because, okay, it's gone up. There's been an increase of, it's gone to 23,972 from 19,947. So in percentage terms, an increase of 13.4%. And that really is quite amazing. We know why it's happened. It's increased by that much despite the fall in turnover. And we've already said it's due to the substantial, or this substantial fall in cost of sales. So to say more there really would be wasting time, since we have dealt with the other two. But again, comment that we have done extremely well in achieving that. I'm just checking my arithmetic a minute. The increase, 23,972 minus 19,947 as a percentage of 19,947. I am sorry. It's actually an increase of 20.1%. The comment stays the same. We have done extremely well. Next one. Indirect expenses. Well, there's a whole lot to comment on. First of all, marketing. We have spent a lot more on marketing. There's been an increase of, in percentage terms again, 4678, 3291. It's increased by 42%, which of course is huge. However, surely this was what you might call an essential expense. In that, we already know we've increased the market sales substantially. The non-financial indicator, we've got a lot of students transferred from the other training provider. How have we achieved it? Presumably, people found out about it because of the marketing. So it was essential or necessary to achieve the increase in market share. It has been successful in attracting students from the other provider. Um, 20% in 2010. Only, what was it, 8% in 2009. And quite importantly, although I'm not suggesting we won't do any marketing in future, we're unlikely to need the same level of marketing in the future. It was this year that we made all those changes, hopefully by word of mouth. We won't need to spend as much in the future. So that was marketing. What else is there? Property costs. Well, property costs, the change here is insignificant. There's no change, and I'm not surprised. These are much more likely to be fixed costs. And so, of course, there's not necessarily much we can do there. Tiny fall, but again, not significant. Staff training. Well, this has gone up. It's gone up a lot, actually. There's been an increase of, I won't keep showing the workings, 3396 minus 1287 as a percentage again. It's gone up by something like 64%. Now, normally I'd be very, very worried about that, but I think here it's probably justified. He said there was going to be a new training program for the staff above the profit statement where it talks about the far improved service. So it was necessary to improve the service. And well, here's a comment we can make. The non-financial indicators, number of late enrolments due to staff error, that's fallen substantially. So fewer enrolment errors. I don't know which staff were being trained, but if it's the teaching staff, that could be a factor in the pass rates. We've got substantially higher, much higher pass rates. It's now 66%. It was only 48%. We've got fewer complaints. (315) down to 84. And so the fact it's improved the service so much, again, although it's gone up a lot, two things. It's almost certainly this has helped increase market share. And again, I'm not saying we should, a bit like marketing, I'm not saying we should stop training, but we're unlikely to need the same level of expenditure in the future. It's very, I'm not saying completely one-off, but in the hope that once the staff have been trained, we won't need to keep training them. Nearly there. Interactive website. Well, of course, a very high cost. Sorry, not a high increase. There was nothing in the past. But this, again, improves the service. And therefore, a factor in getting higher market share. But that will be a cost that repeats. It's the running cost, so we can't avoid that in the future. And similarly, helpline. I should have put the two, I will put the two together. Website and helpline. We have evidence, I've already said, about service being improved. Finally, enrollment costs. Huge reduction. I'm not even going to waste time with a percentage. To go down from 5,000 to less than 1,000 is massively substantial. But, you know, why has that happened? Well, it's due to, presumably, in the developments above the profit statement, due to our electronic enrollment system. So there, an extremely big saving, and presumably that would be continued. And of course, we've already commented on the fact that the number of late enrolments due to staff error, that was another benefit of this enrolment system. So fewer errors, I will mention it again. Well, that's enough there. Finally, though, the net profit. Well, the net profit has gone down. There's been a fall of how much? 3635 down to 2106. Again, as a percentage, 42%. Now, of course, any fall in profits we're not happy about, but it's very much due to it's due to two reasons. It's due to a fall in students, obviously. But, as I've kept saying, and why not repeat it, we have gained market share. However, it's also due to the fact, you see, overall we have been cutting costs reasonably well. But there are several costs there which are perhaps not repeating. It's also due to increased marketing expenditure. and the staff training, which are unlikely to recur in the future. It's dangerous to put too many numbers on it, but marketing's 1,000 higher than last year. The training was 2,000, that's 3,000. If those costs, if we hadn't have had the extra 3,000, then profit would actually have increased. Profits would have increased. Well, that's more or less it. It's nice to have an overall conclusion. And I think the overall conclusion is that despite the fall in the market overall, the company has responded well. Increasing market share, and controlling costs. And there we are. Now, I think I managed that more or less in the time. We could have written more. I mean, read the examiner's answer. I'm sure she's got several points there I haven't made. But equally, she makes the point you wouldn't have expected all of that in the time. Certainly, the points I've made there, well, to claim 20 out of 20 was always a bit over the top, but I'd certainly get very high marks on the points I've made to the level to which I've made them.